Hi there. Welcome to our latest discussion on a topic that's becoming increasingly crucial for businesses everywhere, Beneficial Ownership Information Reports, or BOIRs. Today, we're diving into a strategy that not only saves time, but also streamlines the reporting process for entities organized across multiple levels of ownership. For entities entangled in complex ownership webs, a strategic approach is not just beneficial, it's essential. To leverage this tool I'm discussing requires that 3 criteria must be met. So let's get started. When tackling complex ownership structures, it's useful to employ tools like flowcharts, like the one here. Let's look at Company 1. It would need to file a report, and Person A would be a beneficial owner through ownership interest. They could provide their FinCEN ID to the company if they have one. Looking at this summary filing of this report, here is what would be on the report. It is straightforward and resembles the report for a single-member LLC that was in existence prior to the January 1st, 2024 effective date of the CTA. Now, we're going to consider Company 2 in the flowchart. It would need to file a report, and Person A, B, C, and D would be beneficial owners by way of ownership interest. The way to determine Company 2's beneficial owners in this scenario, where there is an entity owner, would be to trace the ownership back to the individuals. Essentially, you're going to look through the entity. In this case, you would look through Company 1 and analyze Person A. What you'd do is take Person A's percentage ownership in Company 1 and multiply that by the percentage that Company 1 has in Company 2. So, 100% times 25% gets you to 25%, which is greater than or equal to the ownership interest threshold of 25%. So, Person A would need to be reported on Company 2's report. Taking a peek at this report, you can see that Person B did not provide a FinCEN ID, so all required pieces of information about that individual need to be on this report and any others that the individual is on. Check out our video about FinCEN IDs and why it's useful for individuals to learn more about this. Continuing down the chain and looking at Company 3, we can see that we'll need to do some multiplying, as we need to look through Company 2 to get to the individual owners. Tracing through Company 2, you can see that Person B, C, and D are the individuals we need to look at. We'd take again 25% times 100%, which gets us to 25%, landing those individuals on Company 3's report. You would also need to look through a second time to get to Person A. This time it would require 100% times 25% times 100% again, which gets us still at this 25% threshold. Now, here's where we can introduce a useful tool allowed by FinCEN. Under the final rule, as amended, if Company 2 has filed a BOIR and has obtained a FinCEN ID, Company 3 would be able to enter Company 2's FinCEN ID in their legal business name in place of Person A, B, C, and D's information. Let's think about this a little more. I mentioned there's 3 criteria that need to be met here. 1. Company 2 has filed a BOIR and provided their FinCEN ID to Company 3. Number 2. Person A, B, C, and D are beneficial owners by way of ownership interest due to their ownership in Company 2, aka are multiplying. And number 3. Company 2 and Company 3 share the same beneficial owners, the same 4 individuals in this case. As you can see on this summary report, Company 2's FinCEN ID was the only beneficial owner added. Also note here, in a situation like this, you don't want to get caught filing Company 2 before filing Company 3. You need that FinCEN ID in order to use this shortcut, so make sure to plan accordingly. There's something else I want you to consider though. Let's look at this slightly adjusted flowchart. Notice how Company 3 now has a new individual involved. Person E was maybe brought into Company 3 to jumpstart new activities and has duties that resemble those of a president. Therefore, Person E has substantial control over Company 3. This means that the company will need to file an updated report including Person E as a beneficial owner. However, that's not all. We need to consider those 3 criteria again. 1. Company 2 has a FinCEN ID, so we're good here. Number 2. Person A, B, C, and D are beneficial owners by way of ownership interest through which they hold in Company 2. Also still good here. Number 3, Company 2 and Company 3 have the same beneficial owners. Here's where our issue is. Number 3 is no longer met because Company 3 has an extra beneficial owner that Company 2 doesn't have. Therefore, the company does not meet requirements to report Company 2's FinCEN ID in place of person A, B, C, and D. With the hiring of the new president, the updated report for Company 3 would have details about person A, B, C, D, and E's required information, and Company 2's FinCEN ID would need to be removed from the report. Let's look at yet another situation. In this case, person E obtained some ownership interest, and they've also introduced another owner, Company 4. Since our percentages have changed, we're going to need to do some more math. Nothing has changed with Company 1 or Company 2, so we're good to leave those reports alone. But now we need to do some recalculating for Company 3. So we'll look through just as we did before. Looking at person A, you'd need to take 100% times 25% times 33.3%, which gets you 8.25%. Since 8.25 is below the 25% threshold, person A no longer is considered a beneficial owner for their ownership interest in Company 3 and would not need to be on the report. The same thing is going to apply for person B, C, and D, as their multiplication is 25% times 33.3%. So, on Company 3's report, they would need to report person E and maybe even someone from Company 4. Notice how Company 4 is managed by someone else, though, and we don't exactly know who the owners of that entity is. Maybe it's owned 100% by one person, which would result in them needing to be on the report. This is a great example of why it is so important to communicate with advisors across all the entities involved to ensure that reporting has been done accurately. In this case, the professional would want to find out who owns Company 4 and what percentage ownership they have. So I've just scratched the surface of possibilities in terms of specific kinds of ownership structures and the way that they can change over time. Since BOI reporting is not necessarily a one-time thing for companies, it will be important to keep your records up to date and know which BOI report is the most current. Flowcharts may be one of the first few steps of ensuring CTA compliance is done accurately, efficiently, and timely. Now's the time to start evaluating which clients and their entities need to file reports and how you can save yourself time with this filing requirement.